Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a real estate investor, advisor, and coach, as well as the founder of Streamlined Properties and the team leader of Streamlined Properties on Market, brokered by eXp Realty. Whether you are looking to start from scratch, get to the next level, or just a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back to another week of Zen and the Art of Real Estate Investing. Thanks for being here. As always, I really appreciate it. I have a great show for you again this week. I am really excited about it. Before we get there, I'm going to give you this reminder. We really don't get that many reviews anymore. I'm not sure why, but we could use some 5-star reviews if you have the time. It doesn't take very long. I would appreciate it. And I'll just leave it at that for this episode because I want to get to this episode with Liz Faircloth, the co-founder of the Real Estate InvestHER community. This is a great show. The Real Estate InvestHER community empowers women real estate investors to live a financially free and balanced life. We talk all about it and her full investing history. Let's get to it now. This is episode 76 of Zen and the Art of Real Estate Investing with my guest, Liz Faircloth. Liz is the co-founder and a board member at DeRosa Group and the co-founder of the Real Estate InvestHER community. They provide an intimate global platform where women cultivate deeper connections while creating generational wealth. And they have a podcast too, over 400 episodes. Liz, welcome to the show.
Thank you, Jonathan. I'm so excited about being here and connecting with your listeners and chatting.
Yeah, I'm excited to talk to you. Let's actually start with how you started. I think that somebody just handed you Rich Dad, Poor Dad. It was maybe your brother-in-law, and that's what started your journey. Tell us about that.
Yeah, sure. So I was getting my degree in social work. I wanted to be a therapist. I wanted to open my own practice. So I was getting my master's in social work. And I love personal growth too. And my brother-in-law is like, hey, you really need to read this. And I'm like, I don't know what you're talking about. Almost like reading books about, therapy. And I mean, I was very focused. Like that is what I wanted to do, was open my own practice and help people in that way. Anyway, so during that time, I was like, okay, I'll read it. And that just opened my eyes in almost like one of those things, one of those experiences where it hits you in the head and you're like, this is different, passive income and creating wealth, just things I didn't grow up with, things I wasn't familiar with. Naive as that is, those were terms I wasn't familiar with. Yeah. So I was like, this is interesting. And then I started to really get engaged and interested in real estate, because that's one of the obviously vehicles he talks about there. He also talks about sales and saying, if you're not ready yet to, jump into building this big business for yourself, you should become very good at sales. So at that moment, I actually ended up getting a job, interestingly enough, not in social work, but I got a job in sales and consulting. So I actually took that advice to heart. And I said, okay, if I ever really want to build something, you got to know how to sell. You got to know how to enroll people. And so that's what I ended up doing. And at the time, same thing. I met my husband and we started learning and growing and taking courses at RIA meetings, the local RIA meetings. And for about 2 years, we just, took classes, learned, read books. And then we bought our first duplex in 2004, quite some time ago. Yeah. And we bought it was a row home. We borrowed money from my father, $30,000, and got our start with investing from there.
Yeah, I think I had Matt on for episode 51. You guys had a pitch though to your dad. Obviously, your dad knew, like, he trusted you. You'd gone through schooling. Like,
God bless my father. I mean, yeah. I think about it now, and if like my son came to me and said, "Listen, I read this book. I took some courses and I want to buy a property." Now, obviously I'm in real estate, so it's different, but yeah, it must have been foreign to my father, right? My dad was a school teacher, very hardworking family. $30,000 was a really big deal. My dad and parents weren't just like, if we lose it, no big deal. Godspeed. I mean, 30,000 was a lot. 30,000 is a lot in and of itself, but to my parents, it was a big deal, but they did trust us. I really am very grateful for that, because at the time, we were a little naive. We didn't, we knew as much as we knew, but I I wouldn't say I was a real estate mogul
Yeah.
by any means, But anyway, he knew that even if we make mistakes, and this was many years in the beginning, we make things right. We figure it out, and we persevere. So he loaned us the money at 6%. He didn't just give it to us. And we ended up doing a 1031 exchange into a property in New Jersey, because that's really where we wanted to focus our energies from a real estate multifamily perspective. And then we ended up paying that loan back when we did that. So it was pretty clean, which was great. I can't say that for everything we've done with certain things, but that particular one was very clean.
But I think like a lot of new investors, their family may be interested in helping them, but they don't really have a pitch. They come to them too early. You guys had done your research. You had been looking around. So it's not like you came to the table cold and said, hey, can we have 30 grand? We're thinking about like something in real estate. You had a distinct pitch, a property, what you were going to do, what the long-term plan is. And I think that's a great example for newer investors. It doesn't matter what age, but if you're new and you have people who maybe have the money to give you, you can't just ask for the money. There's no security in that. Like, what have you done in order to make sure that my money is protected outside of a 6% return?
Absolutely. Because it's about preserving the money versus just the return. Yeah.
Yeah. And then if you do it well the first time, maybe there's more opportunities down the line to keep that collaboration going.
And both of our sets of parents were probably the greatest support to us in helping us really propel. And it wasn't just their money. We ended up doing lines of credit on their homes that they had free and clear.
Yeah.
And so we ended up getting into some long-term assets and taking some time to pay those lines of credit off. But we were always very current, and we never went back, on any of those lines. So they were very instrumental in our kickoff, if you will. And there's both sets of parents are now invested in some of our larger multifamily as well.
Yeah. Yeah. So, what took you from that? Obviously, you got the bug, you got the first property. What kept you guys going? I know you were going to a lot of RIAs, and then you started holding your own meetings, and that helped you meet more people, which really probably was the path to where you are now with the investor community.
Well, it was funny, right? Because right around the time we moved to New Jersey, we got married. It was 2005 is when my husband and I and we bought that property, by the way, as boyfriend and girlfriend, which is even funnier. We weren't even engaged. We weren't even married. So I'm like, oh, geez.
Yeah, we're stuck. We got this. The property is like the tie.
I always joke with Matt. I said, honey, you and I cannot get divorced because we are so entangled in so much now, joke, but got to keep growing together. That's another topic. But so in 2005, what we ended up doing was, I really started doing sales and consulting. I actually really liked the work I was doing. And my husband, Matt, was an engineer, and he just was done. He was really done. And so he said, why don't I just quit, go all in? Now, meanwhile, he quit it was like, at that time we had I think we bought 2 more buildings. So we had maybe 10 doors, and they're pretty highly leveraged. So it wasn't like we were making enough to replace his income by any means.
Right.
So we did the approach where just go all in and you figure it out kind of approach, which I don't know, it was necessarily the best approach, but it was the approach we took in our 20s.
Yeah.
And we really started to get focused on the New Jersey market. So the Trenton market, the kind of central New Jersey market. And then we started to propel into multi. And then we got involved in a lot of different things, from tax liens to flips to a commercial building. So for the first 5 years, we had our hand in a lot of different things until we got really focused. Then our business really took off and we got laser focused and very, very, very focused on what we were trying to build. But those first several years, Jonathan, I think we were really figuring it out and quite honestly surviving. We were not thriving, but we were surviving, and we were just kind of testing different things. And then we really got focused on buying multis, dilapidated multis, value add multis with equity partners. And that's really how we built our business with 400 investors.
Yeah. Do you think kind of the early diversification or trying things out, was that a pro or a con, at least if you were advising somebody else now? Like if they're, that there's a lot of different asset classes in there that it's hard to become an expert, but you are saying like you learned a lot from it, and none were a complete disaster. So that's a plus, of course.
Yeah. I would say, I always say that the power, I think, in anything is focus, but sometimes you don't know what to focus on. And you also have to think about yourselves. Like, I know for me and Matt, we have this drive for quick start. We've taken a lot of different assessment tools. And one assessment I would really recommend your listeners to take, I mean, we hear about behavioral assessments, but the Colby is a very powerful tool. It actually measures instinct and how we actually execute things, not just what our behavior is. And him and I are both very high on the factor called quick start. So we like to start stuff. We're great starters, right? So that would make sense, right? In our first few years, we're starting all these things, but not really maximizing any of them. Multifamily was the one that we were getting some success with. But yeah, in those early years, we bought a commercial building, Jonathan, and then the market crashed and we didn't have a tenant for a 10,000 square foot building.
Yeah.
So it was a big, big arbitrage on our back. We ended up splitting up the building into small office space and making lemonade out of lemons. But, we just sold that building a month ago. We ended up profiting about close to $200K. But we didn't make any cash flow for 15 years, right? So I think I think trying different things is very important. And then once you find that asset class, and it's not just finding the asset class that makes sense for you, it's got to align with the market. It's got to align with what's happening in the economy. I mean, I can say I want to flip homes and create tiny homes in my community. There might not be any need for that though, right? So, and I don't think I got that, Jonathan, when we started. It was more about running cash flow and saying this is a good asset because it's a good asset in other places, and not doing the true market analysis to say, what will the market bear here? What does the market need here? Who's my customer?
Yeah.
We didn't think that way. What's the business plan? We didn't think that way. And that would have prevented a lot of dabbling and being more, because if you're doing 5 things and you're actually very focused with a business plan, well, then Godspeed. But that's usually not the case, right? You're dabbling and trying to figure it out.
Yeah, but I think by testing out those assets, you guys did figure out which one was going to be the best suited for you. Because I do agree with you. I think like all types of personality assessments, I know that's one of your areas of expertise, are so important judging in partnerships and your investment portal. Like me, I don't like being a landlord because I don't want to be the front person to deal with tenants. It annoys me. I have to have a buffer in every part of my business. As a flipper, I have a project manager. I just can't deal with it. It won't go well for me. And knowing that, and knowing how you want to staff that is really, really important, because you can lose a whole lot of money by trying to run things yourself, either as a flipper or doing your property management when you're not good at it. If you don't like helping the tenants, you're not going to be a good landlord. Did you guys find that out as you went through these different type of entities or asset classes? Oh yeah.
Well, and we were hands-on. We had 100 units and we were landlording all of our units. We had a team, and landlording and property management is not for the faint of heart, right?
Not at all.
I mean, I always say, depending on personality, it's a high management position. I mean, you got to run it tight. You got to run it very directly with rules, policies, procedures. There's no like, well, that's okay, and I'll take this exception. And I'm a social worker, right? And my husband and I are both we're very loving people. So we're both like, oh, you can't pay your rent this month. That's okay. Maybe you could do some work for us. It was a whole hot mess, honestly.
Yeah.
But at the time, but we learned was that where do we shine and where can we build a business around? Because operations is critical to running any property, any business, quite honestly.
Yeah.
But not everyone's wired to operate something. And you really need to know what you're great at, what you're not great at. And even me being in personality assessments, because that's the work I used to do. It did take us some time, but we finally said, okay, what makes sense here? And we ended up giving up the property management once we started to invest out of state. So we always invested within 30 minutes, and we said, how do we expand? And at the time, I remember disagreeing with Matt because we ended up buying a property an hour and a half away from our house. It was in Lancaster. And it was a 49 unit. It was one of the first like larger multis outside of our area. And Matt and I disagreed. He said, well, we can get a leasing agent up there. We can bring our team up there. I said, we really need to look in the mirror here. Do we really want to build a property management company now with you and I as like two people who just want to like, quite honestly, build relationships and find new deals? Who's running this, efficiently, in a very high operational way? And he said, it's a good point. So we ended up giving it off to a third party, which then really transitioned our whole model where we don't self-manage anymore. You have your share of challenges with third-party management companies. I'm not going to say it's all roses and sunshine, but you kind of start to say, what's my lane? And how do I build the company around that? That was a big transition for us. It was a big pivotal moment for our growth, letting go of the day-to-day management.
Yeah, I mean, I think that's a who, not how principle. And I think, what you were saying is important because when you're doing it yourself, you do have a hyper management, but you're managing so much more. When you have your property management, you're still a manager of them, but
Sure.
you're just managing them to make sure they're doing the steps that they're supposed to do.
Correct.
So your time spent on that is less, but you still need the oversight. I think people fail from saying, hey, I found a property manager in Cincinnati. It's going to be great. I don't know them, but I'll just check in 6 months and see how my cash flow is. Like
sure. It's going to be
that's not going to work,
right? Because what you don't manage just tends to just sneak up on you if you're not really on top of it.
Yeah, you said something important though, because we were talking about sales before, and of course, real estate is built on a lot of sales. But you talked about relationships, and that's what I think to be the best at any type of sales entity. You're really just building relationships, and the ones that over focus on sales, like, hey, I'm going to buy your house quick for cash. So people are like, I don't need cash. I need someone to help me get to the next step. Have you guys figured out over the long term, especially with what you do now, that it's still a relationship business? The properties matter, the prices matter, relationship matters more.
Yeah, I mean, that was one thing Matt and I we shined in, and I think is a strength of ours is those relationship building, the value of relationship building, and then doing it. We both do it naturally, and I think it is how you build this business. I mean, especially you have to think about, okay, how do I help someone? And ultimately we had one investor, which is my father, and we've grown into, hundreds of investors in our various deals. Ultimately, they're your customer, right? So you're not just saying, hey, I have a deal, you need to invest with me. You're solving a problem for them. And I think when you're really into relationship building, you really come from that space. Like, how can I solve a problem for them? How can I help them? And if it's not a good fit, then you shouldn't be in our deal. I mean, there's people who are like, I have literally $50,000 to my name. Here's my last $50,000 to invest in your deal.
Yeah.
We don't take their money. Like, that's not a good idea. You should not be giving your last. If you invest money with somebody in a syndication, not that you want to lose the money, but it should be money that can be lost. And it's not going to affect your day-to-day operations, in my opinion.
I agree.
It's investable money. It's not living expenses. It's not, what have you. So we take that seriously. And I did that when I sold the consulting services. I'd have people who I just knew were not a good fit and it would help me. I'd get a nice fat commission, to be honest with you. But you as a really good relationship person and salesperson, you have both entities in mind. You should.
Yeah.
Because ultimately it's not going to work anyway. You're going to have a customer who's not happy or an investor who's literally, just spent all their money with you. Like, that's not a good scenario.
Yeah, it's too much responsibility too, because it's not what is intended there. There's a kind of, a win-win relationship where you're going to help manage, they're going to make X return. If everything looks good, maybe you'll make more, maybe you'll make a little less, depending on what happens. But yeah, when somebody's entire savings is tied up in it, it's a burden that, you really don't want to share. It's interesting, though, that you talked about that, though, because I think a lot of people are trying to figure out what to do with that money, but I think they're thinking too short term. Hey, I have 50,000 left. I want to turn that into 250,000 quick. And sometimes they're looking to real estate, especially these days, like wholesaling as the entity that's going to do it. But there's a lot of holes in real estate that you can go into if you haven't really prepared yourself. You guys prepared yourself well by doing the meetups first and then creating meetups. Have you found that those mastermind groups, RIAs, things like that, are really the things that help people take action?
Yeah.
Because you can read and listen to podcasts, but like you need to see people like yourself who like, wow, that person's done 14 deals. Like, that's awesome.
That's why we created, when Andres and I came together, that's honestly why we created the Real Estate InvestHER community, because I really wish I had that. I mean, Matt and I struggled for a number of years trying to figure it out ourselves. We didn't buy any sort of coaching program, mentorship program, anything, quite honestly. We we spent the money on mistakes. Honestly, you're either going to spend it on coaching or you're going to spend it on mistakes. I mean, either or, right? Well, I joke, but that's was our reality. And I wish I had a community to go to. I think the power of a community, and that's why I love our Strive mentorship program so much, is that it's for women that actually have done 5 to 10 deals. So they're looking to scale, they're looking to grow. And the power of these things is that you can know what to do. These are smart people. but it's, do you take action? And not just action, Jonathan, but it's confident action. And when you have people around you doing what you're doing and are a few steps ahead of you, have the resources, can tap you into someone or something quickly, and you feel almost like you're bringing your board. I had a woman I talked to the other day. She's been one of our members a long time. She's like, Liz, because of this program, because of Strive, you guys literally helped me buy a 9-unit, but not just buy it. It was every step of the way. When I had to figure out the contractor, when I had to figure out the exit strategy, when I refinanced. So that's the power, I think, of any community, Jonathan, of any sort of group you could tap into. It's just almost like you're not alone, having to figure out every step of the way, because there's so many pieces of the puzzle, especially in multifamily.
Yeah, I mean, that really prevents the big mistakes. Like, why make the mistakes that we've already made for you? You know,
Correct.
They can learn from the mistakes that you and Matt made, or that you and Andressa have made in over your careers, to say, like, you know what, at least let me give you some educated advice. And then someone can take an educated risk. Maybe that does become a mistake, but one they're going to learn from. And, you know, educated risk is where it's at. Can I get information from all these people who've done this and then make a choice based on that? You know, take that versus just like, oh, I'm just going to make a choice because I want to, which is what a lot of people want to do now.
Sure. I think we're in such a conservative, especially underwriting and deals. And, you know, there's not a lot of room just to kind of wing it right now. You know, there really isn't. I mean, there probably never was, but there probably was a time that, you know, money was a little looser, you know, especially before the first crash, right? You know, I can go to my parents and get a full, like 90% of their home as a line of credit. Like that's not happening now. So, you know, obviously that was 2006. That was like, you know, the glory days. But my point is that's not now. And so now more than ever, and I believe this is a good time to buy. It's always a good time to buy.
I agree.
If you're buying smart, you just need to make sure you have the backup of, okay, you know, am I looking at the right things? Am I looking at it holistically? What are my exit strategies? And if what's the worst case scenario? How do I get out of this? And there, you know, things happen. So
yeah, I mean, a good deal now is not a good deal in 2006. It's a good deal based on the market and what could happen if the market turns. But yeah, I mean, those are really important. The community is so important to help keep you going along the way, and to be that springboard for opportunities. And it does turn into opportunities, right? A lot of people probably inside the real estate investor community end up doing partnerships, JV deals, because they've built that trust, and they can look at one another and go, like, we're all in this for the same reasons.
Correct. Yeah. And it's neat because we have 50 meetups across the country and in Canada. And one of the women was like, I really want to invest in St. Louis. So I said, we have a St. Louis meetup, and a very good meetup, very strong meetup. So connected her to the meetup leader. And then within days, she had the realtor, she had the title company. She just literally plugged herself into a trusted community and had who she needed to buy her first out-of-state investment. So again, it was like this little mini local community that she wasn't like blindly like, who do I work with? Who do I trust? That matters. That's quick. That's access. That's speed. A lot of the women that come to our community, Jonathan, they don't have 20 years to figure it out, right? You know, they're just like, you know, I done doing this myself, tired of doing it myself. And I want to grow my portfolio with a little more quickness, a little more simplicity and speed.
Yeah. And you and Andressa met on Bigger Pockets, right?
Yep.
Yeah.
We reached out to her. Matt and I were looking to flip in Philadelphia. So we reached out to her and said, okay, let's learn a little more about the Philadelphia market, and started we were friends first. Yeah. We were friends. And then we started partnering on some deals. Yeah.
And then how did you decide, like, hey, let's start this community for female investors to really empower them?
You know, I've always had this kind of shared passion for supporting women. Mine came in when I was actually in grad school with social work. I created a business plan, put it on the shelf for 20 years, but I created a business plan that was to help women that had some sort of mental illness. But I had this vision of creating a community center where women can come, support each other, get into a group, talk, similar to what we're doing now, but they don't have any mental illness. It's more of a financially, you know, savvy woman who wants to grow her wealth. But same concept. And Andressa had her own kind of shared passion for it. So when we came together, we're partnered on a few deals. And so we said, let's start a mastermind. Let's start a women's mastermind. And so we did that for free on Skype before Zoom, dating myself. But we brought like 6 or 7 women together, and we would meet every month and connect with each other, help each other, support each other. And then we'd still get together and go, wouldn't it be cool to have this for other women? And, we go to conferences, this is 5 years ago, right? We go to conferences, we go to events. It just always seemed like there was like 10% women. No woman was keynoting, speaking.
Yeah.
It just
10% sounds like a lot back then to me.
Yeah.
I mean, it was
light. And we said, there's got to be more women investing. We just didn't know a lot of them. And so how great it would be if I think there's a need for this. I think there's a need for a community. We didn't really know if there was or not. We just had a hunch. And so we started a meetup, her and I. We started a Facebook community. We started a podcast. And then, 5 years later, I've really grown that. Our Facebook group is 15,000 women. Our meetups are 20,000 and 50 meetups. Our podcast is published by Bigger Pockets. And then we have our annual conference we do, Investor Con. And then we launched our mentorship program. So the market it's needed. And it's interesting, Jonathan. Now, what we didn't know then was that the wealth transfer in women's hands is shifting. So women currently control $10 trillion of the economy, if you will, money in the economy in the US. That's going to 30 trillion in the next 3 to 5 years. So the need for, yet statistically, right? And then you get into like stats, women can outperform men as investors for a lot of different reasons, and not that they're better investors, but there's statistics that show that I'm not making this up. And yet women have less confidence in investing. And that is also a statistic. So now our hunch that was 5 years ago has become almost like it's a need, right? Women are literally sitting on money in the next 3 to 5 years, and they just don't know what to do with it or have the confidence on what to do with it. And that's really where we see what we're doing is it's not just knowing what to do, but it's actually having people around you so you can take action in a very confident way. So that's really why we exist. And that's quite honestly the work we're up to that we're doing.
Yeah. I wonder if you think that the statistics that you said with less confidence also translates to less ego, which I think makes a better investor overall. The majority of horrendous investing decisions all come from ego. Would you agree with that?
Or emotion.
Got to get the deal. Yeah. Tied together,
Sure.
The emotion to win and or the emotional attachment to a property, which I think is definitely a disaster as well. But yeah, it must have been different at the start then because there were so many less women, at least publicly, in the game then. And now as social media changes, it's easier to get it out there, which of course helps, but you're really helping empower so many people. And how do you stick with it? How did you grow to 50 different meetups? I mean, that's really amazing.
Yeah, we were very mission oriented. We were always very mission oriented and community oriented, even from the beginning. And then we didn't even create a business 2 years in. It was really just, let's just build this community and see what comes of it, more so than how are you going to monetize and how are you going to make money and, get all the questions from people. And we didn't start out with that concern, quite honestly. It was really just a passion project for us. But yeah, I think the key is hearing what people want and need and then figuring out how you can give that to them. Meaning, we knew women wanted to come together. We didn't know what format that would be. So we said, okay, let's do a podcast where we're literally speaking to people, but you're not engaging with people. I mean, so how can we take that where we're actually talking to people? And that's where the Facebook community came in and just said, okay, let's do a Facebook group. And they're like, that's great, but we're really not seeing people, right? So that's where the meetup piece came in. And then women would come out and they say, this is my first night out in 6 months. It's a big deal that I'm here. I got 2 little ones at home. I got 1 rental property, but I really want to grow this. I remember one of our members, our tribe members, give her a shout out, Kristen. She came out. She's like, this is my night out. Literally. I'm so excited about being here. This is not like just a task to do. And now she's got like 12 properties. So she's grown it,
awesome.
And it's just so cool, right? It's so neat to see these women doing what they want to do on their own terms. So
today's show is brought to you by Streamline Properties on Market, brokered by eXp Realty. That is my on-market real estate team. We are investor friendly. We work traditional buyers, sellers, but we also work the investor sphere all the time, house hacking, short-term rentals, flipping, long-term holds, anything that you want to do. We're experienced in that arena. We work the whole state of New Jersey, Philadelphia County in Pennsylvania, Elko County in Nevada, and the Catskills region of New York. So whatever your investor needs are, you can count on us. You can go to streamlined with a D .properties. Let's get back to the show. We do meetups once a month now through the same name as a podcast. And I always love when someone new comes to the meetup, or you know they're coming, and then it's like they kind of like slink in like, is this going to be okay? And then they're like, oh, wait, it is a community like I expected. There's no pitches, like everybody just wants to help.
Yep.
And I think
you support each other.
Yeah, I've talked a lot about it on this podcast, that I think that the outside perception of real estate investors is that they're like sharks and money hungry. And when you're inside the industry, like real estate investors are the most helpful people to new investors if they're approached the right way. I don't know anybody who I'm friends with in the whole investing sphere who doesn't want to help someone who comes to them with a good question and has a good story. Have you found that over that's where the scale is inside this, because that's what people are looking for, is one person to attach to, and then it's like 1, 2, 3, 4, 10 Facebook group across the country, and that helps you grow geographically as well.
Yeah, the women we've interviewed. So and we got started, Jonathan, on our podcast. I was told from a friend who happens to be a male, said to me, he said, listen, you're going to run out of women. I honestly, you should open it up to men and women. I'm like, it's called the Real Estate InvestHER show. The day I have to interview a man for my show, we will close the show. Like I was very, I could be flexible in so many things, but we were not flexible on that.
Yeah.
400 episodes, I've not had a problem finding women to interview, which is super cool. But my point in saying that is I remember the women we've interviewed, they have this really neat approach that like, it's a win-win. Like so many of them have created space for people, like quality housing. So it's all how you look at things. If you're gonna be a slumlord, then you're like you're taking from society. But the people that you and I know are at least the women we interview are not that person, that stereotype.
Yeah.
At all. It's more of like, how do I add value? I mean, there is literally a housing shortage in our country. Literally. Affordable housing. And I don't mean like the technical affordable housing, of course, which, is a whole other
actual affordable
it's a whole
housing.
Other niche in our business. But I mean like literally affordable places to live. I mean, we need real estate investors, good ones, because they're solving major problems in our society. That's what I believe. That's why I love investors, because they're looking for opportunities to say, okay, there's a problem here. How do I solve it and create housing? That's what we're doing. We're not just buying a property and, just throwing people in it and making rent. I mean, some people are, but that's not the people I interview or you talk to.
Yeah, I agree. Yeah, the episode before you, I had Felicia Froh from Money with Mission on, and we were saying the same thing. It's you can invest and make a profit and also have an impact. And I think that you're finding it a lot more in community, because there's the thought like, hey, we can all do this together.
Sure.
You can help people. I mean, there's so many ways that you can help people. Landlords as a whole, like during the pandemic, everyone thought like we're all slumlords or something. Yeah. Like I've been doing this 30 years, and I grew up with my dad giving me a rental ledger where no one had paid for 6 months. And he's go collect the rent. He was you guys in the beginning. He was like, everyone was 6 months behind when I would come home for the summer. And he would say like, well, figure out how to get, that's how I realized I'm never going to be a good landlord. I was the tough person, but I felt so bad when I went home.
Experience for you, Jonathan. I mean, that's
it was. But
money. How old were you?
I started at 18, and I did it every summer. I would come home from college and collect for them.
That's a great lesson.
Yeah. I learned I have low empathy just because of my personality makeup, but I learned it. But also, I had a job to try to get the money, so it was very difficult for me, especially as a young person, to try to like figure it out. But like that's how I learned everything from my dad about real estate and business, but just like you said, your dad was willing to give you guys the 30, you had a presentation. My dad, when I was really young, I was 16. He said, I'm going to put $10,000 into a stock account and you're going to invest in stocks. I'll help you a little, but you're going to figure it out. And I was like, what if I lose the money? And he's like, well, you're probably not going to. You're pretty smart, but if you lose the money, you lose the money. But it was managed like by Merrill Lynch, so I had to request trades, and I ended up doing really well. But it was that freedom. And I think maybe that's what a lot of people are looking for. They don't have a community. So then they get that freedom and the camaraderie, and they're like, oh, wow, this is great. Have you found that really, like, people come out of even their first meetup, like, feeling empowered and like, oh, I found this thing that I've been looking for?
Yeah. I mean, I remember I'd love to get to more meetups. I haven't been to as many as when we started. When I ended up going to one of the ones local to Pennsylvania, and everyone's just, introducing themselves. Hi, my name is, there's a first meeting. And I remember a woman there, she got up and she said, this is my first meetup. I just went through a divorce, and I was always told that I would never make a very good investor. And I'm here because I know I can, but it's just so helpful and comforting to be around other women in a safe space so I can move the needle and really and do what I dream of doing. And we were all just like crying because it's just the way she said it. And
yeah.
And that's, I think that story, and there's so many other stories of women just like, they want to see, and everyone, I can't speak for men because I'm not a man, but I know women want to see themselves in other women. They want to see like, who's come before me? Oh, okay. The mom that's got 2 young kids, aging parents, maybe a W-2. She's figuring it out how she can grow a portfolio. It's the number one reason women invest in real estate is for generational wealth. It's the number one reason.
For
It's
sure.
not to buy a Ferrari. It's not to buy a Lamborghini. Not to buy,
That's
and
definitely a man thing. It's just look on the internet.
Right? That's a dude thing. I love the guys who's like, hey, he's my Lamborghini. But I mean, listen, I like nice things. There's no question. But I'm more like, I'd rather put that money into a rental property, right? My husband's like, hey, I want to finish the basement. I'm like, Matt, that amount of money would be such a helpful down payment for a property. And we debated it, Jonathan, for a very long time. And I said, all right, we work hard. Fine. But, I was really reluctant because I'm like, oh, that 6 figures could go into a property.
Yeah, but once it's done, you can keep him down there for a while. He's not going to really bother anybody.
Exactly. Our property value's gone up. So we're going to do another HELOC, and I'm going to pull more money out so I can go invest it. So that's the way we're going to do that. But that safe space is important, especially when you don't have people in your life, neighbors, other friends. They're all looking at you crazy. Like, what are you doing? Like, you're looking to do what? I mean, so that's what it's about, right? Like-minded that can pull each other up and support each other, both from new people as well as experienced people, because everyone needs help.
Yeah, that's a great point. I feel like a lot of new investors, and I think this is more specific to women, they don't have people who want to say like, become an investor, because just generally men are all like, yeah, sure, do it, invest, like, let's do this. But like women maybe feel like they can't talk to their spouse or they can't talk to their parents about it because they don't think like that's a thing that can be done. And then, like we've said, you find the community and you're like, wait, there's all these people. And they can go to your podcast. 400 episodes of women who've been investing in real estate. It becomes, less difficult to think that you can do it. Everybody needs a model of what they can do.
I mean, even when you go to picnics, right? It's like, what do men tend to talk about? And what do women tend to? I mean, I'm being incredibly stereotypical, but
but generally it's true. Yeah.
It's not like I'm speaking to Susie and like, hey, Susie, what's your net worth? What are you looking to buy next in terms of real estate properties? What are you doing in the market today? It's just, I tend to ask questions of where people are at. And if they're like, oh, I actually have a rental property, then we talk about that because I'm going to pounce on that, of course. And I'll talk about the weather. But, it's very interesting, right? I think we've learned a lot about, being appreciative of all genders and all people. But it's interesting, right, to play into what makes a good investor, what makes a, good this or that, or how do people thrive? And it's fascinating, right? And I'm very mindful of, the effects of all that in our space because of who we serve. So,
yeah. Changing gears a little, over your whole career now of investing, what do you think if someone comes to you and says like, hey, what should I invest in first? I think that's always a question that people ask. Of course, it can be different based on what their preferences are, but what do you think like is a safe first investment for a new investor?
I think it's a great question. I think I always like to say, because then I always get the questions, what market should I invest in, right? These are all useful. These are great questions. I don't think they're the first questions. And what I mean by that is I think there's a better question to ask, okay, like what are my financial goals? Where do I want to be in 5 years financially? What kind of returns am I looking for? Am I looking to replace my income? Am I looking for some just passive income? Or am I just really like set it and forget it? And that's going to work from my strategy or where I am in my life. I don't know if enough people take it more like from a financial planning perspective. And if you did that work and you said, you know what I really need? I really need 10%. I really need a 10% kind of gain on my money, interest on my money. And that for the next 5 years will get me to where I need to go because of the amount of money that I have access to or whatever.
Yeah.
Well, then the next question is, do I become more active or passive? Because if I can get that return passively, then why wouldn't you do that?
Yeah, right.
You know what I'm saying? Like, honestly, I am an active investor. I am a passive investor. And I've been more years as an active investor than passive. And I can say, it's like, what's the least resistance to my goal? And I think that's really what people need to do the work to figure out based on my time, based on my money access, based on my experience, based on my lifestyle. So I think all those things matter before we start to get to say, what is the right asset for me? Because now if the answer becomes, I want to do this full time, I want to replace my income, I don't want to I have 50 grand. All right, well, passively investing and you want to get to $1 million, that's going to take some time. So maybe taking a different active route makes complete sense to you. Then the question becomes, and if that is where you end up leaning, I think then the question becomes, again, how do you become part of the solution of the housing shortage? I think you have to think of like, how do I solve problems? Okay, so then there's different assets to do that. Multifamily, single family, short-term, midterm rentals, So then the question becomes, what markets am I looking for? Does the asset class match the market I'm looking, that I'm looking to do? So it's like, what are my goals? What's like happening in the market, in the economy, like what's needed? And then it's also what asset class will get me there. I mean, a lot of people start with single family homes. It usually is the place that they start. I don't see a problem with that. You don't necessarily have to start with single family. You can start with a small multi. I love multifamily. I think that's a great asset class. I don't think you can lose, but you may not make the best decision. We bought properties in Trenton, like tough areas. I mean, I have bought properties. It's not in Class A. I mean, this is Class C minus.
I know Trenton well.
Yeah. So it's a, capital of New Jersey and a city that my husband and I were so excited about investing many years ago because we just saw such a great opportunity and just make a difference. And the city's going somewhere. And I mean, if you go there now, it looks like the same Trenton as it did 15 years ago, unfortunately.
Yeah.
But anyway.
But I think the point you made is great. I mean, I think that to figure out what your financial goals are so important. Like, do you need cash flow? Are you doing it for cash flow? That's a different type of asset.
Correct.
Are you interested in just hanging on, but being hands-on? Appreciation is going to be great then. But like you said, passive investing and syndications can be really good if you know how to do it. And that's something that I never did that now, finally, at 52, I'm like, I'm going in on syndications for, like you said, like, I don't want to be in the day-to-day of a lot of this stuff. I want to, rely on trained operators who I know really well to deliver me returns because I don't need that right away.
And I think the key is also to start to, get a nudge, start to do the work, take some action, talk to people, and then it's like this regroup. It's always like you're regrouping, you're assessing, listening to different things, listening to podcasts, and then say, okay, that's interesting. There's a need here. This is a college community, and there's 3 hospitals, and they're building another hospital. That's interesting. Maybe a midterm rental could be really helpful for traveling nurses. It's all like asking the questions and then taking that one next step. And talking to people who are investing in the market you're looking to invest is critical.
Yeah.
I always say you cannot control a market. You could participate in one. So find one you could participate in. That's moving in the direction people are coming to, right? Money is being spent in. It's very simple stuff. I mean, we could all go down the market analysis, and I'm not Miss Market Analysis. There are plenty of other smarter people than me, but are people coming to the city? Are people leaving? Are jobs being created? Are they leaving? These are simple things, right? Is construction happening, or is there no construction? I mean, simple stuff that we could start to watch and say, I can see how I could solve a problem. This asset class could work here. And there's all these things happening. There's a lot of new multifamily. That's interesting. Maybe just improving some of the existing multifamily, I can be competitive because people don't want to spend 1,500.
Yeah.
They want to spend they just want to spend 900. That's what we did in North Carolina. We renovated a building, and there was so much new construction happening that our class, say B minus property, we brought up a little. We brought the quality up, brought the tenant base up. And we have a waiting list because no one wants to spend 1,500.
Right.
They'd rather spend 1,000 in a very nice apartment. So all of that matters, and I think that's the sort of thinking that people have to do, and not just say, "What should I buy?" Well, it's a little deeper than that.
Yeah, I've always advocated for neighborhoods, even if you're out of state investing. I still think it should be a place that you're interested in. You've done the research on that. You might like to go there, so you are able to check up on your properties. Like when people, it's okay if you've never been there and you're managing it, but you have to have you want to make the community better. Your real estate's supposed to help that. So you have to understand, why am I investing here? Some people just will send me a property in some random town. And I'm like,
I know.
Do you know anything about this town? They're like, no, but the numbers look good. I'm like, the numbers don't mean anything. If you don't, the spreadsheet doesn't mean anything. It's just literally a pile of numbers that somebody told you. Nothing's verified. Like you said, is the town increasing in population? Is this going to help people? Or is there development around? Or things coming in? What's been the commercial base around there? They're just not thinking like that because, again, social media, for all it's good, has a dark downside for people who are looking to get in. If you're looking for a quick fix, you'll find it on the internet. It's probably not going to be good because real estate investing is not short term.
I always say to people, if you're going to become obsessed with something, pick the market to become obsessed with.
Yeah, great point.
Versus the deal itself, because then you can move quickly. And if I say to you, what are the average rents for the middle of the market in terms of type of property that you're going to buy? Like maybe it's, not class A, it's class B, it doesn't have granite, but it's a nice apartment, in the area. And if you can't give me a range, then how are you going to make any decisions on what's a good, it just doesn't even make any sense, right? So I wish I knew that, Jonathan. If you said, what do you wish you knew? I would have become so much more knowledgeable about the market itself, especially a market that I was looking to buy in, from everything from, job growth to, are people coming, leaving, what's happening in the economy? What are my average rents? What's happening with new construction? Is there an oversupply and undersupply? All of that. I didn't think that way. We're just like, oh, this property's cheap. We can buy it and make a difference. It is so limited in our thinking, but we figured it out. But it's that market piece is really where people have to become knowledgeable.
Yeah.
The deal is less important.
And the information's out there. I mean, if you're researching a town, go on the town website. Look, you can figure out what the master development plan is, and then you can pick areas. For me, I've always been an investor who looks at the town behind the town. I became really good at buying the houses that I lived in. That's one of my best investment vehicles have all been houses that I've lived in.
Oh, that's great. Yeah.
Because I knew how to, I would buy not in a fringe area, even when I had kids, I was like, I want to buy in an area that's up and coming, but maybe it was not necessarily all the way up and coming, but then I would double my money and just in a very short time. I was in Florida at the time. Money doubles quick there if you pick right. And I think that's what's interesting. You can look at markets people will say everyone's investing, in Austin or Nashville, but those places are huge.
Correct.
There's things that are considered Austin that nobody, maybe people know about, but they're off the beaten path. And those to me are interesting. And it goes to what you're saying. If you want to get obsessed, obsess on the whole town. Figure out everything, where the dynamics are, where a Starbucks is coming in or where a Whole Foods didn't work out, because that means it's not working.
And where that where the affordable housing is needed, because people may not be able to afford Austin. But then if you look at the map and say, all right, what is a half hour, 45-minute radius?
How far is too far?
Because now people are going to flee. People are going to get overpriced somewhere. They're going to go somewhere else. Yeah. That's where you want to go. That's been the markets that we've invested in, and they have always been great markets because there's movement there. They're getting they just can't afford the most expensive area anymore. So where are they going to go? They still have that job in downtown. They don't want to be too far. So where are they going to go? great, invest in those areas.
Yeah. Yeah. And I agree. And I mean, look at what we learned during the pandemic. They're not going to have to go back to work. I mean, some people are starting to do that now, and then it's about commute time. But then maybe that property you got out that they're a little bit more rural. Maybe that does become your short-term rental or your midterm rental, which my sister and I had short-term rentals before Airbnb existed, like 20 years ago. So we were doing them. I always saw the value in, but I really love midterm rentals now. And I love I love hospital midterm rentals, and not just for
so many good things. We don't have any, but
but not just for the doctors, but like for me, with someone who have a lot of deaths in my family over there, there's lots of people that come in, there's people who are in hospitals for a really long time. And then do you want to stay in like a Howard Johnson's for 3 months, while somebody's sick in a hospital? These things, that's an impact on somebody to be able to cook every night and not have to go out, for dinner and spend 10 times more money.
Absolutely.
So when you have condiments and stuff in the house and cook and do laundry, you don't have to bring as much stuff. So these are things that people, maybe they don't think as wide as we're talking about, but hopefully they do. They're thinking numbers, cool, spreadsheets are great. But I want to know more. I want to know more about the community. And like you said, what impact, is possible.
Yeah, totally. That makes complete sense.
Yeah. So, I mean, where are you guys with the InvestHER community? Where are you looking to do going forward? You have a big impact. You have 50 meetups. Where are you going to take it from here? And how many more people do you feel like you can empower? Because I think it's just great.
Yeah. I think the goal is to create this kind of worldwide community where women can get plugged in wherever they're going. There's a local group. And more importantly, there's a path, right? So we're serving in our mentorship program women who are looking to scale and are tired of doing it by themselves, right? They're doing everything themselves. And we've really created a really fantastic program where women can get masterminding and support and accountability and all the knowledge and be part of small groups. And, we've done that the last couple of years. What we're looking to do is really elevate our meetups and even help those women who haven't done their first deal or their fourth deal. So there's really almost like a pathway, right?
Yeah.
So we're looking at shifting some things there, just taking our meetups to a different level of, membership, camaraderie, support, what have you. We do our once a year event in June. Our next one will be June 2nd through 4th in Austin, Texas.
Oh,
we have
nice.
500 women that come. It's just it's a fantastic 3-day, 2.5-day event. We're going to start to do events that are regional. So like in Austin in February, we're going to do maybe 100 woman type of event. So we're going to start to have these pop-up events where kind of like the local groups can kind of come together in more of a localized way. And then we kind of as a community, right, pour into the once a year. But we want to serve women holistically. We're doing a lot around obviously investing, but business, self-care, that's what we stand upon. So our webinars, our programming are always holistic. And so, that means working with maybe sponsors who can serve them that way. We have partnerships. We start a whole preferred partner program for companies who want to work with us over the year and pay to do that, but obviously get exposure to the community, but also solve the women's problems.
Yeah.
Right. It's a win-win. It's not like, hey, as a sponsor, you should use their random product. It's like, how does this product help you streamline your business? And so we really curated a year-long preferred partner program. We're really excited about that. Our kind of sponsors that we're just doing and InvestorCon are coming on board to say, hey, let's really partner up and see how we can serve the women. So those are where our focuses are of growing what we have and quite honestly, serving more women so they move the needle to creating wealth for themselves and their family. That's the end goal. Yeah. So it's just lots of ways to get there, but that's the ultimate goal.
Yeah, I really believe in the holistic approach. I mean, I created this as the mindful approach to real estate investing because I spend, like you, so much of my time, personal growth, mindfulness. And I really think it's something that's missing from the business. It's like, oh, let's talk numbers. Let's talk, there's a lot of things like if you're not set up in your life, you're not going to be a good investor.
Correct.
If you don't feel good as a person, you're going to make bad investing decisions.
True.
That's why these communities, like you said, are so important. It provides that extra, feel good thing to make sure you don't make bad decisions, because one bad decision as an investor may not take away your entire investing trajectory, but it can. It definitely can. If you make a really bad one start, you're just never going to want to do it again.
Yeah, that's so true.
Yeah.
And you don't want that one bad taste in your mouth to affect the future. And there's a lot of work, right? We have a lot of women who are like, I'll never partner with someone again, same kind of thing. Yeah. And it's like, well, hold on. What did you learn? What did you contribute to that? I've had really good partnerships. I've had tough partnerships, and you
Yeah.
got to keep learning and growing to be effective. So,
But generationally, that one bad deal can have a big effect, because then instead of creating generational wealth, you're telling your kids and their kids like, oh, and real estate investing is
it's a bad
bad. Like
idea.
you're going to lose all your money.
Yep.
And then those people grow up with that
So
opinion
true.
and don't have the vehicle as an asset for them, unless they can find something, out there, which is
Such a good point.
great. Awesome. So where's the best place to get in touch with you? It is at the realestateinvesther.com, right? That is the podcast, the community. That's where people can go to get involved with you and address and all of the great communities across the country that you guys are doing meetups for, right?
Yeah. All of our meetups are listed there, and all the information. I'd also say we do 2 free events, and it's for men and women. So they're welcome to come to our websites, the Real Estate InvestHER, HER.com/events. These are free webinars we do. We bring on experts from investing to self-care to business. And we do those religiously twice a month. I'm usually the one facilitating that. So I just would, invite and get involved in our Facebook community. Ask questions that you need to ask. We police that group like you would believe.
That's very important. Very important.
Get the support you need. Ask for what you need. Women don't do that enough. And, you need something, ask for it. That's why we have the community.
Yeah.
I'd love to hear from anyone listening to tag me in the Facebook group. Say, hey, I listened to you on this podcast. You told me to tag you. I'm tagging you, and I will definitely respond.
Yeah. But the policing of Facebook groups is so important, because they just become a portal for garbage. So if your moderation isn't there, it's not worth it. The better the moderation, the better the group every time,
Agreed.
The more value you can get out of it. Well, I'm so excited we finally had the chance to get this done. It was a pleasure to meet you.
Yes.
Well, will you be at BPCon in October?
I will. Yeah, I'm doing a women's networking event with some other women facilitating it. So yeah, I will be there and excited about being there again. Yeah.
Oh, wait, this is going to be great. Yes, this is going to come out right before BPCon. It literally might come out the day before BPCon starts. So we're prefacing that. I'll be there. I look forward to meeting you and Matt there. And this will come out like the day before.
I'd love to meet you in person. That'd be great.
Yeah, can't wait. All right, Liz, thanks so much for coming on. I really appreciate it.
Thank you, Jonathan.
That was episode 76 of Zen and the Art of Real Estate Investing with my guest, Liz Faircloth, the co-founder of the Real Estate InvestHER platform, podcast, all of it. Please go get all the information you need there. I'm Jonathan Green. We'll see you next week. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green. And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to like, subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.